This is Dave at TitleSearch.com. When we run title search reports on investor properties such as foreclosures, it's very common that we'll come across IRS tax liens. This is one of the most common type of lien on any distressed property. It follows that if somebody is probably not paying their mortgage or their property tax, they may not be paying their income tax or maybe short paying their income tax. So an IRS tax lien is going to be common. What does an investor do when coming across an IRS tax lien? A couple ways to look at it. One way is to just figure that lien amount as a liability or an encumbrance for that property. It may be possible for an investor to reduce the amount of exposure for that property. Contact the IRS. In many cases, the IRS Treasury Department may allow a reduced payment from an investor as long as they're not related to that debtor taxpayer. They have nothing to do with the prior ownership of the property. The IRS is part of the federal government. They want to get these properties sold and put through the system. So in many cases, they're willing to accept lower dollar amount payments, settlement payments, to get that lien off of the property. The lien still is in effect for that borrower, and if that debtor, delinquent taxpayer is elsewhere and have another property, or they, even if they're a renter, they're still going to have to pay their debt, but at least it gets it off your property as an investor. You may also find that once you investigate that IRS tax lien, you may find that it's already reduced. The Treasury Department may not record reductions in amounts or payments on the title because it's interim payments. They're going to record that first IRS tax lien and not record anything else until it's paid in full and cleared off. So you want to make sure that is any amount of that already paid. You don't have to be responsible for as an investor. You also want to look at the years of the tax. On that IRS tax lien document, you'll see what tax year that each one of those liens is for. Is it for 2005, for 1995? That may affect how much reduction or how much discount you may be able to get as an investor. And also be certain it's the correct party. Some IRS tax liens will be in the land records or in the civil court records with a name that's the same as the property owner, but there may be a slight variation of middle initial, social security number, or even address. So you want to make sure that that lien is effective. The reason why this is important for experienced investors is you can sometimes get a property where other investors are scared off of purchasing because of that tax lien. If you can discover that that tax lien doesn't belong with that property or that the amount has already been reduced, you may be in an advantageous situation to purchase that property and make more of a profit. So IRS tax liens are common on investment properties. You want to take a look and see what you can know as an investor that give you an advantage over your competition.